Hello and welcome to the 2015 Commonwealth Market Update. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. 2014 was a good year. We had a tough start to the year, but at the end, we really came out with a strong recovery, a strong stock market performance, and we entered 2015 in a much, much better place than we were in 2014. There's a couple of stories here that we need to talk about. The first is the U.S. versus the rest of the world. I mentioned the U.S. recovery has gotten stronger and indeed accelerated over the year. Unlike the rest of the world, we're doing well. If you look at Europe, for example, if you look at Japan, their economic stagnation continues. If you look at China, they continue to grow, according to government statistics anyway, but they have to continue to do stimulus, which the Fed has actually stopped doing this year here in the U.S. Everywhere you look, the U.S. recovery has outpaced pretty much everywhere else in the world, and the performance of our financial markets reflected that. U.S. markets were up for the year, up significantly across the board. By and large, markets elsewhere in the world were down. What's this mean going forward? Well, first of all, there are two real stories we need to look at going forward. And the big one right here is the price of oil. We've seen the price of oil crash this year. It's down by 50%. That's a big drop. Here in the U.S., that's a net positive. It's a huge positive. Cuts in the price of oil act as a tax cut. They put money in the pockets of U.S. consumers, and that helps growth. So we're actually going to see economic growth, I believe, continue to accelerate even more driven by this. It's also a positive factor for the rest of the world. All of the developed nations depend on oil, much more than the U.S. They need this relief. That's going to help on a global level. The other thing we need to be aware of is the effect of the strong dollar. Because the U.S. is doing so well relative to everyone else, because our interest rates are not going down the way they are in other areas, because the Fed has stopped stimulus, what we have here is we have a strong dollar that helps the U.S. balance of trade. Another positive. Drives the price of oil down even further for U.S. residents. Another positive. But there are downsides to both of these very positive factors. The first is the strong dollar is going to hurt corporate earnings. Here in the U.S., we had great earnings performance in 2014, and we should continue to see growth, but it's not going to be as strong because foreign earnings, which are a significant proportion of corporate earnings, are going to be worth less when they're translated back into U.S. dollars. Second of all, the low oil prices, even though it's a huge positive for the rest of the economy, are going to hurt the energy sector. In other words, the energy sector, which is a big part of the stock market, is going to have lower revenues, lower profits, and that's going to be another headwind. Looking forward in 2015, the U.S. economy will continue to grow. The stock market will probably face some headwinds, and there are other risks out there, primarily geopolitical. We need to see whether Japan can in fact jumpstart growth. We need to see whether Europe is going to be able to do what they need to do to jumpstart growth. We need to see how the Russian situation plays out. So there are no shortage of risks as we enter 2015, but as we end the year of 2014, we know this. We've made real progress as a country. The U.S. is better positioned, again, than anywhere else in the world to continue to do well. And finally, because we are in a better position, all of the risks we face, we're going to be much better positioned to move past them than we have been for the past several years. Thank you for joining us, and I'll talk to you next month.